All right, gang, before we get into this, I wanted to be clear about something. This is just math. There's no opinions in here. There's no pitch and there's no angle. It's just numbers. Numbers you can actually verify yourself. If you go pull out your closing documents from when you first bought your home, find the page that says TIL, T-I-L, Truth in Lending. It's in there, and every lender is required by law to give it to you. That page shows you exactly how much you will pay over the life of your loan. Total payments, total interest, all of it. Now, most people sign that page and never look at it again, and usually because it's like 400 pages deep, and that's fine. You weren't supposed to, but today we're gonna look at it. We're gonna take a $250,000 mortgage, 5 years in, so 60 payments have been made, and we're gonna run the numbers on what happens when your lender calls and says, we can save you $370 a month. They'll tell you the break even is 18 months, and that's real. That's the closing cost divided by your monthly savings. That's the number they're required to show you, but that's not the whole picture, because nobody asks the next question. What about the 60 payments you already made? What about the 5 years of interest you already handed over? When you factor that in, the real break even isn't 18 months. It's over 19 years. It's the same house. It's the same loan. It's just the full math story. So let me show you. The refi story. Your lender called and they have a deal for you. They're gonna cut your rate and save you a couple $100 or a few $100 every single month. But the math, it tells a different story. So you bought the house, right? $250,000, the home you worked for, the equity you're building. How you handle the refinance call changes everything. Most homeowners get this call. Almost none of them run these 5 numbers before they sign. So why is my balance barely moving? You've been making payments, 60 of them, every single month for 5 years. You checked what you owe and it barely moved. You weren't imagining it. Something was taking your money before it touched your balance. Every borrower has felt this and nobody explains it. And I don't care what you're borrowing to buy, this is pretty much true to form on everything these days. So here's exactly where your money went. $250,000 loan, 5.75% APR, $1,304 a month payment. Payment number 1, follow the math, gang. So here we go. Step 1, monthly interest charges. $250,000 times 5.75% APR divided by 12 months equals $1,197.92. Straight to the lender. Now, here we go. Step 2, your total monthly payment, your loan calculator is $250K at 5.75% divided by 360 months is $1,304.12. What you sent to your lender every month. Step 3, what actually hit your balance. $1,304.12 minus $1,197.92 equals $106.20. The only part that's reducing your debt. Out of $1,304 that you sent in, $106.20 went to your principal. So $1,197.92 divided by $1,304.12 equals 92% of payment 1 was interest. Not the 5.75 cents per dollar that you're thinking because of your APR. It's 92 cents, and that's your actual effective rate. And the effective rate is what you're paying. The APR is not what you're paying. This is called amortization, front-loaded by design. On a 30-year mortgage, you don't cross the midpoint, meaning that more than 50% of your payment is going to your principal until year 19. And most people refinance between 7 and 8, leaving them in this constant state of the majority of their payments going in interest to the bank and not to their principal. And gang, now you can see it. So there's 3 numbers they show you and 1 they don't. So here we go. They show you 5.75% original APR on your original loan docs, and this is required by law, and they fully disclose this. Then they show you 2.75 with the new refi APR, the rate that got you to take the call. Now they show you $370 a month in savings. It feels like found money, but let's run the full math. So they don't show you 92 cents. That's your effective rate for payment one. Of every $1 you sent, 92 cents was lender profit, meaning 8 cents went to your principal. The refi pitch shows you rate and payment. It never shows you what happens to your amortization clock. So stay the course, keep the clock running. What feels disciplined? No new closing costs. 25 years left, not 30. Equity keeps compounding. What nobody calculates is the loss of $219,000 still owed to the lender in interest over 25 remaining years. $469,000 total paid for a $250,000 house. Better than the refi, still a long road. So staying beats refinancing on total cost, but only if you ignore what the money could be doing instead. So take the refi, reset the clock, minus $228,000, all in interest cost on the refi path. Monthly savings they're telling you is $370. Closing cost, $6,862. True break even, 19 years and 2 months. New total term, 35 years. Your new first payment, where it goes, don't forget the problem here, gang. 56% to the lender, 44% to the balance. 60 payments by 1,304 plus 6,862 closing costs equals $85,109 divided by your $370 a month savings equals 19 years before you actually are feeling the $370 a month benefiting you. So both paths share the same flaw. Your money stops working. So what if your $228,746 didn't have to leave your possession or leave your ability to compound and grow it? So $228,746 at 5.5% for 20 years is $695,000 in tax-free cash. So pay off the house and keep the equity growing. Here's the deal. Number one, fund the policy with your balance. $228,746 into a dividend-paying, cash value whole life policy engineered to grow you cash. Guaranteed growth every year. It is not subject to markets at all. Market could go up, down, sideways, or stay flat. You're continuing to grow. 2, borrow against it, not from it. Policy loan pays off your mortgage. Your $228,746 inside your policy never moves, never leaves, because it's still compounding on the full balance even while the money's being used. 3, redirect your payments into the system. Your $1,304 or $934 now repays your policy on your schedule, not the bank's. The payoff is 12 to 15 years. 4, uninterrupted compounding for life. 20 years. $228,746 never stopped compounding in your favor, resulting in $695,000 in tax-free cash, while your mortgage was also being eliminated at the exact same time. And it's not magic, gang, it's math. Same house 20 years later. So stay and pay. Don't do anything different. You're going to be down $219,000 as your net position. Total interest is $219,483 paid. Wealth built, 0. Term, 25 years. No reset. Net loss, $219,483. Refi path, minus $228,000. That's a bigger loss, is your net position. Total interest paid is $228,000 because you went backwards 5 years, remember. Now you add your closing costs of almost $7,000 on top of that, your term is 35 years. Clock resets. Net loss, $228,282. IBC leverage, $467,000 in your favor is your net gain. Mortgage gone in 12 to 15 years. Interest saved, $150,000 plus. Cash value earned, $695,000 plus. At the exact same time, you're paying off that house. Term, you're done early. Net to you is positive cash flow of $466,745. $686,270,000 total swing versus a refi versus leverage. Same house, same balance, same starting point, same budget, nothing changed, except we're using the IBC leverage to get out of debt while building wealth at the same time. And listen, the reality is it was never about the rate. The rate's the smallest. You keep paying, money leaves, it stops working permanently. Or two, you take the refi, money leaves longer, still stops working for you once you spend it. Everybody knows once you spend your money, it's gone normally. Or three, we leverage your position. Money stays working even while you're putting it to work. Your house is paid off faster. So car loans, student debt, business equipment, real estate, every major financial decision is the same question. The math only cares about where the money sits. The only question when your money leaves your hand, does it stop working for you or keep moving forward for you? Every major purchase, same decision every time. Let the money leave, stay or stay with what you're doing now or refinance, your money still stops working for you. Let it keep working, leverage, and it never stops working in your favor. So when you're ready to run your numbers, the link is in the bio. We would love to speak to you. Have a wonderful day.